What if I told you one of the biggest investment opportunities in history isn't happening on Wall Street, it's happening in space? Welcome to another episode of Elevate from Burnout to Bliss. I'm your host, Reggie.
And I'm Ebony. Today we are talking about the company that's transforming the way we think about technology, communication, transportation, and even the future of humanity, SpaceX.
That's right. Just over 20 years ago, SpaceX was a startup on the verge of bankruptcy. 3 rocket launches had failed. The company was running out of money, and most experts said it would never survive. Well, today it's preparing for what could become the largest IPO in history.
But this episode isn't just about rockets, billionaires, or even stock prices. It's about vision. It's about risk. It's about seeing opportunities before anyone else does.
We'll break down what SpaceX actually does, while Wall Street is buzzing about this IPO, and why some analysts say it's worth nearly $2 trillion, while others say that's dramatically overpriced, and most importantly, what lessons everyday investors can learn from one of the most fascinating companies ever created.
So buckle up, because we're about to explore the intersection of innovation, investing, and the future.
That's right. Remember, it's time to elevate.
Let's do it.
All right, guys, we are back in the studio once again. As usual, we're really excited to bring today's podcast to you because we got a very, very hot topic. It's what's trending right now in all financial news. And that is, we're going to be talking about today the SpaceX IPO. You know, what happens when you bet on yourself. And I'm going to tell you this. This is a great time, great space right here to go ahead and, call somebody and say, hey, look here. They are talking about, I heard you talking about SpaceX IPO. You probably want to tune in. We're going to get some good information on both sides of that coin. So, anybody in the investing world, people want to, a story about resilience and all that good stuff, reach out to them right now.
Go ahead and call them.
Go ahead and call them. Say, tune in right now, Power 104.1. If you listen online, send them the link because we're about to drop some real important information on you. Before I go too deep with that, as you know, I am a certified financial planner as well as a registered investment advisor. So I have to tell you that today's discussion is for educational purposes only. Nothing discussed on this program should be considered a recommendation or an offer to buy or sell any security, including any potential SpaceX IPO. Investment decisions should be made based on your financial circumstances and in consultation with your professional financial advisor. All right, that being said, Ed, what do you think we ought to jump in at today?
Let's start with the SpaceX story. It's a very, very interesting story.
SpaceX does have a story. Most people, Ed, think that SpaceX is about, we kind of said this in the intro, they think SpaceX is about rockets. It's not. There's a lot more to it than that. It's really a story about resilience. It's a story about betting on yourself, which, you and I have done, when everyone else thinks you're crazy.
Right.
It's a story about why the biggest opportunities in life often look impossible before they look inevitable.
I like that.
Yeah, they do, man. So that's really what the story about. And, as many of you all know, SpaceX was started by Elon Musk. I don't really care where you are on him as an individual, as a political figure, as what governmental figure, wherever you are on him. All that's irrelevant as it relates to the story and the stock.
Right.
Okay?
We're talking about the business.
We are talking about the business. So, put whatever you get, whatever preconceived notions you got aside about that, put on your thinking cap. Right now it's time to learn. So before we talk about SpaceX itself, I want to talk about the move that Elon Musk did to even have the money to pull off SpaceX.
Okay.
SpaceX. And that's it. So a lot of people don't know. Most people never ask, where did Elon Musk get his money from?
Right.
All right. So let me tell you, Elon Musk was one of the, I don't know if he inventors or what have you, but he's one of the founders of PayPal. So actually in 2002, way back in 2002, when PayPal went public, we keep talking about public offerings, IPOs.
We need to explain that.
Yes, I don't want to make assumptions. So let me pause and do that real quick. An IPO is the date that the stocks of a company that were formed, a company that was formerly private. This is the date now its shares are being sold to the general public. So now the general public can buy ownership in a company that was previously a privately held company. All right, so it's the initial public offering of its shares.
Right. That's what IPO stands for. So the first time the public can buy a share of this stock.
Correct. You don't have to be a private investor. All right. So anyway, so when PayPal IPO back in 2002, I think it was eBay, if I remember. I think it was eBay that bought PayPal. Elon Musk got $180 million after taxes.
Wow.
$180 million. And what he did with that, and I've always been amazed at that, because if you look at it, if you pull off, a move that gets you $180 million, for a lot of people, and I don't think many people would fault you for it, most people are like, okay, my ship has come in. Mm-hmm. I'm pretty much done with this thing called work.
Right.
And we put it on cruise control from an island near you. You know what I'm saying?
And I want to go back to prior to PayPal. So Elon Musk's first company was a company called Zip2.
Oh, okay.
And he actually sold that. He wasn't the sole owner of that company, but it was his very first internet startup.
Okay.
And that was sold to Compaq Computers in 1999.
Wow. Compaq. I remember Compaq. Uh-huh. I can still see that logo.
I know, right? For $307 million. And he had a 7% stake in it, so he got $22 million.
Man, okay. Well, you're going to see a pattern develop in it, because after he sold PayPal, what he did, again, he had $180 million. He took $100 million of that money and put into SpaceX. He put $70 million into Tesla. A lot of people think he started Tesla. He did not start Tesla. He bought the controlling ownership in it with $70 million, and he put $10 million into Solar City. So that's where the money actually came from to get SpaceX going. So just think about that, y'all. Everybody listen, think about that. Just imagine. If you own, just imagine everything you own, or the lion's share of everything you own, and you willing to bet that on an idea that you have. Mm-hmm. I mean, again, I don't care what you think about the man. I think that's an admirable trait, to say, hey, I'm going to take $100 million and bet it on this idea that I got.
And I want to add that you have to be in a position where you can learn from anybody.
Yeah.
It doesn't matter what a person's political views are, how they feel about other people. There is something that you can glean from their experience, their story, their work ethic. So be sure to be able to separate the person from what a person did.
Correct. I'm going to give you a quick example of what you just said there. One of the characters from history that, if you really look at a lot of stuff he did, is not someone you want to emulate in a whole lot of areas, and that's Napoleon Bonaparte. Mm-hmm. But one thing that Napoleon said was, when he had a goal, he said, when I'm locked in on a goal, all obstacles must give way. Not that they possibly may give way, but once he fixated in on a goal, there was no obstacle that would stop him. Again, so that's a character trait that's worthy of admiration without having to admire the whole person.
Exactly.
But anyway, so again, going back to Elon, this is like early 2002. This is at a time, y'all think about this, America relied pretty much totally on the government agencies, a handful of defensive contracts for space exploration. The idea that a private company could build a rocket, launch satellites, carry astronauts into space, and eventually send humans to Mars, that sounds like something more from a sci-fi movie, which I love, than it did from a business plan.
It definitely does, because it's so hard to fathom. Like, you would even think that wouldn't be allowed. Like, it would be illegal.
Right, like some kind of...
Right.
Right. But Musk had a vision, man. And so, again, after he sold PayPal, he took a lot of that money, like I said, put it into SpaceX. And what most people don't realize is that all three of these companies actually were struggling at the same time. So they ain't like they just took off flourishing. Matter of fact, by 2008, SpaceX had suffered 3 consecutive rocket failures.
Wow.
3 of them. The company was running out of money. Tesla was on the brink of collapse. And Musk later admitted that he was down to his last stash of cash. Yeah, so it was getting tough. But then September 28th, 2008, everything changed. And what happened was, that's when they first launched the rocket, successful Falcon 1. Went into orbit and became the privately funded liquid fuel rocket company to accomplish the feat. It was the first one, It was the first one to accomplish that feat. Weeks later, so shortly after that, they landed a contract with NASA, and then SpaceX was worth more than $1.6 billion.
Wow.
So, again, just taking all of that, getting the right engineers in place, the right team in place, having failure after failure after failure to boom, get one successful launch. Okay, now I got some success. Let me go grab this contract for $1.6 billion.
Wow.
You see what I'm saying?
And that's kind of the abbreviated story, y'all. So the in between when he was trying to buy rockets and things like that, that is a very interesting story. You can go out on YouTube and find several stories, so might want to check that out as well.
Yeah, and see, now he's known, or the company rather is known for using the reusable rockets. But this was before all that. So by making those rockets reusable, SpaceX dramatically lowered the cost of reaching space, and that disrupted the industry that had changed very little for decades. People hadn't even thought about the fact that you can send a rocket up and then use that same rocket again. You know,
and it was kind of like, I know there are a lot of conspiracy theories on whether we even made it to the moon, but it was almost like once the space race was completed, then it was on to other things. No one was intrigued by space anymore.
Right, exactly. So if you were to ask most people, though, what is the economic engine inside of SpaceX? Like, where's the money really being made? Most people can't answer that question. All right, so I'm going to tell you. And I would say this, if you are considering being a part of the IPO or buying it in the general, on the general market, open market after the IPOs, then you should at least know where the money's being made, or at least where most of the money's being made. Well, SpaceX is the company that launched Starlink. Okay, Starlink is a global satellite internet network, provides high-speed internet across, pretty much access in the world, because what Starlink does is beaming down internet from satellite that's in low orbit all around the world, all around the Earth. And right now they're serving millions of customers around the world, and they become one of the SpaceX's most valuable businesses. So Starlink right now is, I think, from what I understand, from what I read, is the most profitable arm of SpaceX.
They have 7.6 million subscribers.
Okay, so that'll do it.
Yeah.
That'll do it. 2020, SpaceX became the first private company that actually launched astronauts to the International Space Station. I would doubt I'd ever be a part of that, but it was a very historic moment that basically kind of reignited America's ability to send humans into space from U.S. soil, because they had started catching rides up there with other countries,
right?
Which I always thought was weird. Like, okay, U.S. astronauts going up with the Russian cosmonauts. I'm like, okay, we can't do that,
right?
But anyway, so guys, listen. SpaceX is not just a rocket company; it's a transportation company. They charging the government to take astronauts back and forth to the space station. They're a satellite company providing high-speed internet. There's a plan. I saw a plan. Not to talk too much about what they plan on doing, but one thing I did see is they have an idea, which probably passed the idea phase, of putting these really massive. You know how right now you got the data centers for the AI and all that, and people complain about what all it's doing. They got an idea of putting that in outer space, in low orbit. So they're a defense contractor, they're an internet provider, and potentially one of the most influential technology companies of the 21st century. So, I mean, that's again, an abbreviated version, but that is the SpaceX story.
Wow. That's a good story.
So, yeah, you're right, Eb. It is a good story. But, again, what I want the listeners what I want all of you all to lock in on is that this isn't just a story about stocks. It's really about vision, perseverance, resilience. I would even say a tad bit of insanity, which I've said before. I've said that before. To really, really, really be successful. I mean, to really, and I'm talking about to do something that's remarkable. You have to be so locked in that you're willing to keep going. You heard me say this. You got to be willing to keep at that thing when all logic says it's time to stop.
Yeah, that's right.
And man, and we've shared part of our story before. Go ahead, I think you said
something. So I was going to say, in addition to all of those things that you said it's about, I want to add that it's also not about Elon Musk.
Correct.
It's about what we can pull from that story and apply to our own lives with our own ideas. God has given us things that we are especially skilled at, and He has given you ideas that match those skills.
Right.
So it's important. You think about the perseverance that he showed, the innovation. Look, just take 10 minutes one day and write down every single idea that you have. Don't filter it. Don't think about whether it's logical at that moment. Just blindly write down everything that pops in your head for 10 minutes, and then refine that list and see what special gems do you have on that list.
I can guarantee if you do that exercise, which Ebony and I have done, you will find that you have multi-million dollar ideas locked inside of you. You do that exercise, you're going to look up, it's going to be one or two things on there. You're going to be like, you know what, that just might work. Mm-hmm. And the difference is, what are you willing to risk on making it work? Mm-hmm. You know, and again, as financial planners, as an accountant, I'm going to always say, hey, let's take calculated risk, right? It's not everybody's path to put all the chips on the table. Mm-hmm. I'm not going to advise that. Have I done that? Yep, I sure did. But I'm not going to tell someone else to do that. But what I am telling you is there will come a time when you need to be able to push past what other people can see. And are you willing to bet on a future that only you can see? Mm-hmm. That's crazy. That's crazy. But are you willing to do it? It really is crazy. Yeah, and you got people going to tell you, man, look, I got a little time break. I can tell you all. I've told you all, those that listen, man, there were times in building our business, our practice, where we did a show not a couple weeks ago on keeping up appearances or what have you. But we had the burden of making ourselves appear to be stable when that just was not the case, to be financially stable when that was far from the case. But we had to keep pushing. We had to keep pushing when we were getting job offers. Right. That was paying 2-3 times more than what we were earning. You know what I'm saying?
But it would not lead us to the goal.
It would not have led us to the goal. So anyway, we pushed through and we on the other side of that. So again, that's the thing that I want you all to take away from as we continue this talk, as we continue this walk through this SpaceX IPO. So right there at the beginning, I wanted to give you a little backdrop on SpaceX, so when we talk more in these next few segments, you have a better grasp of what this company is, the background, and all that good stuff. But one question I want to leave you with before we go through this commercial break, and that's this: what opportunities are you overlooking today because you or someone else has said that seems impossible? Think about that. Chew on it. We'll be right back if we come out of the commercials. Keep it locked on Power 104.1 FM. Remember, it's time to elevate.
Today's episode is sponsored by P3 Financial Group, where we enrich the lives of our clients by helping them plan, protect, and prosper. Call P3 for all your tax and financial planning needs at 901-209-4015. That's 901-209-4015.
And we are back. This is the Elevate podcast from Burnout to Bliss. This is Reginald and Ebony Clark. We're your hosts, and today we are talking about the SpaceX IPO. That's right. What happens when you bet on the future? In the first segment, we talked about the story behind SpaceX, and now we're going to get more into the actual IPO and what that means. But just in case you missed it in the first segment, I do want to say that today's discussion is for educational purposes only. Right. Nothing discussed on this program should be considered a recommendation or an offer to buy or sell any security, including any potential SpaceX IPO. Right. Investment decisions should be made based on your individual financial circumstances and in consultation with your professional advisors.
That's right.
So let's talk more about the actual IPO of SpaceX.
Okay, let's get down to some numbers.
What do people need to know?
Well, here's a few things they need to know is that SpaceX has filed for the IPO as expected. The date, unless something changed, would be Friday, June 12th. And reports, now this is where it starts to get crazy, y'all. Stay with us on this. The reports indicate that a share, they are estimating that the shares will open up at about at $135 per share. And they're actually selling 555,555,555 shares. So a bunch of fives. So start at 555 million and just work your way down.
9 fives.
There you go. 9 fives. That's how many shares they're selling at approximately $135 a share. That's going to raise $75 billion in capital. Ooh. Okay? $75 billion in capital. But now, that number is not to be confused with what the company will be worth.
Exactly.
Once it opens, once they open at their price.
So when I want to make sure everyone understands, when a company does an IPO, initial public offering, we talked about what that actually means. They're selling shares to the general public.
Right.
But we hadn't talked about the reason why people do that.
Yeah, let's do that.
So a lot of times companies will do that to raise money, to raise capital for them to invest back into the business. So it's not just because, it's because they're trying to raise money, and the way to get that is from the general public and sharing in ownership with the general public. Exactly.
So they may be using that to expand operations, to something they need to do with the money,
open up new markets
or what have you. And you can and that's one thing that we like to do is keep this sort of thing very simple. You got a business, you need some money. You got two ways to get it. You can borrow the money, or you can sell off some of the ownership and raise capital that way. So that's what they're doing. And the plan to raise is $75 billion. Now again, don't confuse the capital raise, the amount of cash. So let me say it like that. Don't confuse the amount of cash they'll be getting that day with the value of the company. Those shares, if priced at their $135, would make this company worth $1.75 trillion with a T. That's how much the company would be worth. And
that's hard to even fathom.
It is. And they're only selling a small portion. I want to say it's less than 15% of the total available shares. So that means 85% of the company, of that $1.75 trillion, is still owned by Elon Musk and whoever the other private investors are, right? So it's just kind of wrap your mind around that right off the bat, all right? So if this comes off the way that is playing right now, it will be the largest IPO in history.
And what that means, it definitely would be the largest IPO in history. And what that means as far as the largest IPO is that company is raising more money than anybody else has.
Correct.
When they IPO.
Right.
Right now, the top three is a company called Saudi Aramco, and they IPO'd in 2019.
How much did they raise?
$29.4 billion.
$29 billion. That was the capital raise.
That was the capital raise. Next was Alibaba in 2014. They raised $21.8 billion. And then Meta Platforms, when they IPO'd in 2012, they raised $16 billion.
Wow. So I want to say something else. That's very interesting. Thank you for sharing that with us. You all, when the company IPOs, when the stock goes public, the underwriters, the people that put the IPO together, they've chosen the stock price that they're going to sell it for to the general public. And I'm going to talk about this a little more, I think, down in the third segment. I'm not sure. I may be jumping ahead here. The thing that you got to remember, and actually if I am jumping ahead, that's okay because it's worthy of being repeated. The thing you got to remember here is that this is the price that they're setting. It don't necessarily mean it's what the company's worth. This is what they're selling the shares for, right? So when it gets into the general market, that's when the decisions would be made based on the numbers of buyers and sellers. So that price, just because of stock is going, it's what we call an IPO, that does not mean as soon as you buy it, it's going to shoot up, all right? It sounds exciting. It does not mean that price is going to go up to $300 a share first day. It can go up or down.
It can.
All right? So you have to keep that front of mind that the day you buy that stock, the moment you buy it, it most certainly can go down. Will it? We don't know. I don't know. I'm just telling you that's a possibility. So sometimes we get excited about, so-and-so got in on the IPO. Yeah, that's good. But it's only good if it goes up, or even if it goes down, you're willing to hold it until it goes back up. So I just want to throw that in there right now. Because, again, that $135 mark is just the price that the seller has set that they're going to sell that stock for day one.
And there's been some companies that they call them IPO fails when it goes down after it IPOs. But there's some really well-known companies.
Facebook did it.
Facebook, Groupon did it. There's been several that went down after it IPO'd.
And so think about this. So let's talk about that. Let's dig in real quick. If it went down after it IPO, who was it a fail for, though? Just think about it.
If it went down after it IPO'd, it was a fail for the general public.
There you go.
The common shares.
There you go. It was a fail for the person that bought it, not for the people that sold it.
Right.
Because that means they were able to sell something for more than what it was actually valued at. So the people that bought it had two choices. sell it for a loss or hold on to it and hope it come back. Now I'm gonna tell you, with that Facebook IPO, and I don't have these numbers in front of me, but here's what I remember. I think it's maybe $35 a share. Somebody can check it out. I can't remember. But what I do remember is that after it IPO, it probably went down 35, 40, maybe even 50% of the initial price. Mm-hmm. And that bad boy came back, and I'm telling you, it has never looked back since then. And so that would have been one of those ones where on the initial hit, it looked like you had lost money, but if you'd have held strong, I mean, you would be sitting very pretty right now. So anyway.
It IPO'd at 38 per share.
38.
But I think I remember, and again, just going off memory, I remember seeing it down as low as 13, I believe.
Yeah,
at
it went
one
down.
point.
Right. Shortly after the IPO, it
Before
dropped.
it shot back up.
Yeah. Oh, it hadn't looked back. You know. So anyway, so I wanted to put that in there. So Elon and his team are actually doing something else a little different with this IPO.
They are.
And that is, they have decided to allow retail investors, that's people like me and you, all right, to get more access to the IPO than what normally takes place. So what normally happens is when a company, go again, IPOs, your big guys, mutual funds, hedge funds, pension funds, they typically gobble up 90 to 95% of all the available shares. So if you take that 555 million, that long number I gave you, of the number of the shares that would be available, usually 90 to 95% of that is immediately swooped up by those guys.
Right.
And only 5 to 10% is available for individual investors, which is a very small share of of what's available. Well, what SpaceX is doing, they've said as much as 30% will be available for the retail investor. And that's huge. Because,
that is huge.
Yeah, because now you're making more of the pie available to people that don't manage hedge funds, that don't have a mutual fund or whatever. So that's pretty big.
That is very big.
It's 3 times the normal allocation to the smaller players. And this is kind of typical Elon Musk stuff where he challenges conventional wisdom. He kind of flies in the face of expectations or what have you. So again, that's a really big thing.
Earlier, you had mentioned that as far as the number of shares that are being sold, it's about 15% is about the average that we've read. So I want to make sure everyone understands what that means. That means that Elon Musk and the initial investors, they maintain an overwhelming majority of voting.
Absolutely.
And does that mean that they can come back and offer more shares later?
Yeah. Well, can they come back and offer? You said, can they come back and offer? Can they come back and sell some of the stock that they have? Absolutely, they can. Yeah, they do it all the time. And so to that question, so if anybody that's labeled an insider sells shares that's already trading, all they got to do is disclose to the general public, hey, I'm about to sell 1 million shares or whatever it is. One share. If it's one share, I'm about to sell it, and then once you disclose it's just public information, they can sell it.
And this is different too because sometimes in IPOs, the founders don't retain that much.
Right.
The majority of it is sold to the public, and they retain a smaller amount of control.
Yep. So some people say, well, why again going back to how much they're making available? Why is he doing it? Well, a couple of things. Some people say he's doing it to reward his loyal followers. Tesla and SpaceX got this kind of like cult-like following. Now, a lot of that's been shattered here in the last few years. But some people say he's doing it to reward, long-term followers, create some long-term shareholders, more individual shareholders. Management reportedly believes that these investors may be less likely to immediately sell some of their shares than traditional IPO traders. So they may attract some more long-term investors.
It's interesting because I wonder, so if we think about supply and demand, which drives prices,
right?
Fill in the blank, it doesn't matter what kind of price, supply and demand drives prices. Under a normal IPO situation, 90 to 95% is purchased by institutions, which leaves very little for the individual investors. I wonder if that creates more demand. So I'm interested to see what the price is going to do when there's more available to the general public. Will it create the same demand?
Well, I'm glad you said that, Ed, because now this is the other side of that coin. So what you bring up is something that some of the analysts say this may not be a good thing, offering so much to the general public because it has the potential possibly to become a meme stock. Mm-hmm. Because they're saying, analysts are worth, same thing happened with Tesla, GameStop, AMC, where investor excitement and social media influences prices as much as company fundamentals do. Mm-hmm. So that is a concern. And that's a concern on the bear side, meaning this is a concern of caution that, hey, because he's offering so much to individuals, could that create a trading block of people that's trading it based on things other than how well the company's doing?
Right.
Yeah, so it's interesting that you brought that up. That's a good point.
And then a flip side to that coin is you were saying one of the reasons why they may be offering more is to reward the loyal fans and loyal supporters. I wonder if that will create more stability in the stock later on, because obviously when institutions get rid of a stock or take it out of their portfolio, it's in mass. It's a ton of shares. Mm-hmm. So I wonder if that'll create more stability. It's just interesting. This is a different model.
Yeah.
So
it's
I'm
definitely
curious as to how it's going to come out.
Yeah. Because what he's doing is basically a big portion that's bypassing the traditional Wall Street gatekeepers. Through his career, Elon has challenged established industries, like he's challenged the auto industry, now the space industry, social media. So many analysts view this retail allocation as another example of Elon Musk disrupting a traditional system. So, like you said, it's going to be interesting to see, by putting this many shares available to retail investors, ordinary individuals like us, what would that do to the stability or the acceleration of the stock itself? Great points. Okay, so what does this mean for the everyday investor? All right, so here's a couple of key questions I want y'all to think about as we head into this last break. Is the valuation reasonable? So when we talk about valuation, basically what you're asking is the $135 per share a reasonable amount? Well, some analysts say yes. For every analyst that says yes, that's a reasonable amount, guys, there are other analysts that says no, that's too much. All right, and I want you to think about it like this right here. Think about it from the standpoint of a very nice home that you want to purchase or that you're interested in purchasing. And let's say that all the houses on this particular street in this neighborhood are all selling for $200,000, right? We say it's a beautiful neighborhood, close to real nice schools, got a nice lake, got walking trails, it got everything you want. You know this house is a $200,000 house. But the seller tells you, I'm selling it for $400,000. What do you do? And then the seller makes the argument that in the future, it'll be worth what you pay for it today. That's the argument that some people are making concerning SpaceX. Yes, it's going to get to a point where those shares are worth $135 per share. But they are saying that there's twice as much as it's worth today based on the earnings they see today. So you got to ask yourself, am I buying the earnings today, or am I buying what I think is going to grow to for this $135 a share?
That's interesting, because one of the things that can't be quantified is how people feel.
Right.
You can't put a dollar amount to how people feel. So although the analysts may say it's worth half of that right now, not if people want to buy it.
Well, true.
So,
and when they say that, they're basing it off of earnings.
No, I agree.
Off the figures and,
Right. So this is what it says on paper. This is what it says logically. But think about some of other inventions where people overpaid. People used to buy rocks, a pet rock. It was literally a rock. Right. But it doesn't matter. The value is determined by what someone is willing to pay for it.
That's true. All right, guys, stay with us. I'm gonna pick that point up as soon as we come back. Stay with us through this commercial break. Remember, it's time to elevate. And we are back for this final segment of the Elevate podcast, from Burnout to Bliss today, and we've been talking about the SpaceX IPO. What happens when you bet on the future? As we did at the top of the first and second segment, I'm going to do this because it's so very important. I gotta share this disclosure with you. Today's discussion is for educational purposes only. Nothing discussed on this program should be considered a recommendation or an offer to buy or sell any security, including any potential SpaceX IPO. Investment decisions should be made based on your financial circumstances and in consultation with your professional financial advisors. So, y'all, first segment, we kind of gave you the backstory of SpaceX. And in the second segment, that's where we really dug into the numbers as it relates to the SpaceX IPO.
And how IPOs work in general.
Yeah, and how IPOs work in general. We talked a little bit about some that, did well right off the bat, some that did not do so well. I want to continue that same conversation because, Evan, you ended by saying that the value of anything, really, is based off of what a person is willing to pay for. So, and she's absolutely right. Buyers set the value, right? So the analysts are saying, no, hey, it's not all analysts, not all analysts. Some analysts are saying, hey, I understand that, but however, this is what we think it's worth.
Exactly.
All right? One other thing that is interesting about this particular IPO is that usually when a company IPOs, the founders lose significant influence because they sell so many of their shares, right? So they lose a lot of voting power. Well, that's not going to be the case this time. Elon Musk is expected to maintain an overwhelming amount of voting control after the IPO. So he'll continue to sit very securely in the seat of control. Well, again, which is typically a little different.
It is
after going through such a big IPO.
And another interesting point about this particular IPO with SpaceX is that they don't have anything a similar company to compare to. So when these analysts come up with their figures on what a company is worth and valuations and things like that, it's not just something off the top of their head. It's research and looking at comparable companies. But what they found is that they really don't have a direct peer for SpaceX from a valuation standpoint.
Real quick, so just what Ed was saying, so just like today, if a group of us got together to start transportation or a shipping company that said, hey, we can get packages somewhere overnight, they can look and say, well, let's look and see how they compare to FedEx, that maybe their stock price should be close to what FedEx is. So what Ed was saying is there is no other company like SpaceX to compare it to.
Because it's like, okay, is it a technology company? Is it a telecommunications company? A defense contractor, an aerospace company, an AI company? It doesn't fit into one category.
Because the answer is all the above.
Right.
It's everything you just said. So that's what's kind of giving analysts the blues. So it boils down to you. So again, if you want to be a part of the IPO, you have to ask yourself, do I think it's worth paying $135 per share today? Or do I want to wait and it goes down to $75, or do I wait and it goes up to $230 or $280 and then I try to, again, because it's an IPO, everybody's doing their best guess that day.
And that's it.
That's really it. And see the price that the current owners who are selling the stock on that day, they're not choosing a price that they think will make the stock skyrocket in the aftermarket. For instance, let me be more clear. If they thought that these shares were going to go up to $200 a share the instant it's sold, then that would be the IPO price.
Because I want to make sure y'all understand. If the stock IPOs at $135, that's what the owners get.
Right. That's what per share.
Per share. If the stock then goes from $135 to $200, individual investors and the public is what gets that $65 per share, not the owners. So Elon Musk and his crew don't get that. So
not in the form of cash, in the form of increased valuation for their own stock. But I get what you're saying. Go ahead.
So that's what, to Reggie's point, if the investment bankers and the owners thought that it could go for more that particular day, then they would have just raised the IPO price.
Exactly. So, and again, I'm going to help you formulate your own thoughts, and that is, I shared with you before that we already talked about SpaceX, but that Starlink is the biggest revenue generator that SpaceX has right now. But keep in mind, the company overall is making money from launching rockets, government contracts, defense applications, again with the Starlink, of course, and future AI infrastructure opportunities are on the table. So analysts that support the valuation. So again, you got analysts that saying, okay, the $135, that's legit. Mm-hmm. Those that support it, SpaceX becoming a platform company rather than simply being a space company is their thought process. They say it's a company that's, is going to offer all these things and they're going to do it very well.
But then there are people who think the opposite.
Yeah.
So not everybody is convinced that this is
right. Everybody's not
drinking
the Kool-Aid.
Right. Morningstar estimated that SpaceX's value is actually around $780 billion, which is less than half of the target IPO valuation.
Yeah.
So the target is $1.7 trillion, right? Mm-hmm. Morningstar is estimating $780 billion. So.
Yeah, so, just think about that. So they believe, Morningstar, based on their analysis, they believe investors are being asked to pay twice the amount, more than twice the amount of what it's actually worth.
Yep.
So, our investors, are the people that's buying the IPO a bunch of suckers?
Yeah.
That's. I'm
not answering yes.
I'm not answering yes either, but that's what Morningstar is saying.
That's what the question is, right?
So, again, it's going to boil down to who you. Now, it's really not. I was about to say who you believe. That's really not true. What do you think?
What do you think?
Yeah, and let's not say what do you feel, because we're going to take some emotions out of it. What do you think? It's really what it boils down to.
Because a lot of critics, they think that the high valuation is based on what the potential of the company and not necessarily what the company is producing right now. So, I don't know. Do you pay more now for future potential?
Yeah, and if you do, and if you're willing to hold that, it may not be a bad thing. Mm-hmm. If you're willing to say, okay, I'll pay more than what it's worth today, because it's going to get there, or do you say I'm going to wait till it get there? Well, that may not pan out either. So I don't know. I can't. I'm not here at the end. So I'll tell you, I don't want any of our listeners to drop off. But if you want me to tell you at the end of this podcast what I think you should do, then that's you're not going to find that advice, especially not going to find it in this area. Now, those of you all that are our clients, feel free to hit us up, and we'll talk about it some more. But anyway,
that's what I was going to say. Like, it may feel like we're going around and around in circles, and it's not that. We can't give you an answer.
Right.
What we're giving you is both sides of the coin, so you can formulate an answer with your financial advisor if you have one, with us if you're a client of P3, or with your own, or on your own. So we're giving you what the analysts are saying.
Yep, and analysts note that SpaceX would be trading at a revenue multiples rarely seen in the market history, meaning that they would be trading so much higher than what they actually justify. Rarely seen in market history if they get this $135 a share. I mean, investors are assuming years of extraordinary growth will occur exactly as planned. So if you buy it at $135 a share, your assumption is that the growth is going to go exactly as planned. Mm-hmm. And again, I'm not here to say that it won't, but I'm just giving you a lot of stuff to chew on. We're giving you a lot of stuff to chew on as you make your decision. And we're going to give you some more. Go ahead, Ed.
And it is interesting that I went over the top 3 largest IPOs to date, not because SpaceX had an IPO yet. So if the largest right now is $29 billion. Mm-hmm. So you're saying that some analysts are saying SpaceX will be more than double what the largest is now. So I don't know.
Yeah, well, it's possible.
It's possible.
It's definitely possible. So the future expectations are massive, So again, you're talking about the Starlink dominance, AI infrastructure, orbital computing, long-term space commercialization. These are all exciting opportunities that's on the table,
right? But
still largely unproved.
So does that warrant the high price now?
Yeah.
I don't know.
We shall find out. So, as you continue to think about this particular IPO that's coming, Friday, June 12th, as you think about it, here's some other things to ponder, right? Imagine this 1997, did you recognize the opportunity that was lying in Amazon? You know, would you have invested in it at the time? Amazon. Do you remember what Amazon sold first?
Yeah. Do I remember what they sold 1st? Books.
Books. So how many people were lining up to buy the IPO of a company that started in somebody's garage where you could just buy books?
Right.
You know, but look at Amazon today. You know, go ahead.
And what opportunities exist today that other people are dismissing because they say it's too early?
It's too early.
So
often, no, go ahead. Yeah.
Just not many people. When you look at the cycle of a product or a service, the early adopters are the ones that go in first.
Exactly.
And that is a very small percent. I can't remember
10.
the percentage. I thought it was 10.
10.
But only 10% of the people are brave enough, for lack of a better term, to be an early adopter. So what are you dismissing, waiting to see what happens instead of being an early adopter? Right.
So if you imagine a bell-shaped curve, if everybody know what a bell-shaped curve looks like, 10% of the people are early adopters, 10% on the back end are the people that finally come kicking and screaming. The majority of society lives in the 80%, you know, of the Me Too people. Not to be confused with the Me Too movement. Not to be confused with that, all right? So a question to think about, too, is that what industries are going to create wealth over the next 20 years, okay? That's one thing, too, when you look at this, when I was thinking about this guy was thinking in decades. Like what's coming in the decades in front of us as opposed to the next few months or the next quarter. And again, I don't care where you are on him as a person, but just looking at how his mind works is really different. So when you think about what's coming over the next couple of decades, of course, you can't minimize what AI is doing already, what it'll continue to do. Cybersecurity, data centers, all of these, man, SpaceX will be
robotics, energy,
space economy. So all these things is what SpaceX will be involved in, undoubtedly. So again, is $135 per share worth it? That's going to be up for you to decide. So as we start to wrap up a little bit here, I'm going to finish where we started, and that is, SpaceX IPO really ain't about rockets. It's about vision, like I talked about earlier. Yeah. It's about seeing tomorrow before everyone else does. I want to share a real quick story. I think it was Vanderbilt. Vanderbilt made his initial lick, from my understanding, if I remember right, I think it was in the shipping business, but it was over boats, using ships, actual ships. Well, new technology, new inventions came. He was one of the earliest adopters in railroads. And he sold his ships to go into a whole new industry that didn't even have tracks yet. But again, built a fortune because, again, an early adopter. Yeah. So, wealth does favor early adopters.
It does.
I'm not telling you to go out and buy it. I'm just telling you what history has shown. All right?
And whether you buy one share of SpaceX or not, the real lesson is that people who create extraordinary wealth are usually the people who are willing to invest in extraordinary ideas before it's obvious.
Yeah, that's true.
They see it when no one else sees it.
And the question, y'all, if you think about it, is not whether SpaceX will change the future. The question is, what future are you preparing for? I think that's a great segue to kind of talk about, let's bring this home to our audience.
Yeah, what idea do you have that can change your own future?
Yeah.
Don't sit on it.
Time, if we haven't learned anything else over the past few months, is that time is not, however much time you think you have for yourself and for someone you care about is less than that. All right, so if you got a good idea and it's just been baking in the oven, man, go ahead and bring the thing on out.
And whatever thing you see, whatever company you pass by, whatever company you do business with, work for, whatever it is, everything starts with an idea in some person's head.
It did. And they were just crazy enough to take it from an idea in their head, to put it on paper, to sharing it with the right people, to,
keep going. When
keep it going.
People say you're crazy. No, I wouldn't do that. That doesn't work. That can never work.
Right. You're a fool. Yeah. And then they're the fool that everybody's clapping for when they walk in the room because they created something that's phenomenal, changed the earth, and yada, 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 yada.
Yeah. A client told me yesterday that through everything, any obstacle, she just tried to take one step, keep one foot moving in front of the other. That's it. That's
all you can do. That's all you can do. So, guys, I hope this has been a great episode for you. Again, this IPO is coming up very soon. next week, if you listen to this in real time. And you got to make up your own mind, but I hope we've given you some information that will help you base your decision on. Continue to do your own research and make up your mind if you want to participate. Could be a great opportunity, could be something you're like, oh, dog, I wish I hadn't done that. Only you will be able to tell, and only time will tell. But but now you got the information.
You have the information.
Because you sat in with the Elevate podcast from Burnout to Bliss. I'm your host, Reggie.
And I'm Ebony.
No, we about to sign off. But if you want to get in touch with me, you can reach me at 901-209-4015. Actually, it's me or Ebony. 901-209-4015.
Then on social media, I am Eb the Advisor, EBTHEADVISOR, and Reggie is the Money Jedi.
All right, guys, we're going to get out of your way. Keep it locked right here on Power.
Oh, also find us on YouTube. All of our past episodes are on YouTube.
That's right. All past episodes are on YouTube. Now, keep us locked right here on Power 104.1 FM, The Source. We'll talk to you soon, guys. Remember, it's time to elevate.